here's what the legendary investors are doing and saying, always trying to bring you the most crucial financial information in the most efficient way possible. We do not waste time on this channel. First up, Charlie Munger. Here is Charlie Munger's current portfolio. This is his personal portfolio as of October 5th, 2022, in his most recent 13F filing. Only 5 stocks other than Berkshire Hathaway. Bank of America Corp, very interesting, 42%. Wells Fargo, 39%. Alibaba Group Holdings, 15%. US Bancorp, 3%. PKX, POSCO, 0.22%. Very interesting, regardless, just sharing with you what one of the most brilliant investment minds of all time is currently investing in. Thought you would appreciate that. Here's an update from Carl Icahn, an absolutely genius investor. Carl Icahn to investors, the worst is yet to come. Now, why is he a genius? The stock market saw its worst first half of the year since 1970, but Icahn, whose career in finance goes back to 1961, and who has made his mark as an activist shareholder, has had a robust 2022 by contrast. The net asset value of Icahn Enterprises increased by 30% in the first 6 months of 2022, and I think he just made $250 million or so on his acquisition of Twitter shares. So he's just an absolute genius, and this is what he's saying. I think a lot of things are cheap, and they're going to get cheaper. He said later, pointing to companies in the oil refining and fertilizer businesses. So he's on the inflation hard asset commodity trade. He mentioned CVR Energy, CVI in particular, as ones to watch. So feel free to do some research on that asset. Not surprisingly, Icahn said inflation was playing a significant role in the market's downturn. Inflation is a terrible thing. He said, observing that it led to the downfall of the Roman Empire. You can't cure it. So right now we're in this big battle for inflation. We all know what's going to ultimately win. It's going to be currency debasement. You really can't cure money printing and inflation in big empires that have massive debt. As for the recently approved Inflation Reduction Act and its aim to reduce carbon emissions, Icahn said he understood the need to curb carbon, but thought the legislation went too far. He likened it to a sick patient who is prescribed too much medication. If you take 100 pills at once, you'll die, he said. So he is still seeing more doom and gloom on the horizon, saying the worst is yet to come. So he understands how sticky the rising interest rate situation is and how devastating it is for financial markets. Then you have Michael Burry, another absolute genius investor. He was right about the financial crisis. He was right about the short squeezes. He actually bet on the short squeezes in GameStop and Bed Bath & Beyond. So it was correct on the upside there. He was right about the financial collapse during the pandemic. And now he is saying this. This was said on October 1st. Another feeling I'm getting is mid to late 2000. Free cash flow totally on sale and ignored while former momentum stocks are coming down, but not far enough. And darling, better businesses still had a ways to fall. Value was about to take off for years, despite more crash on the way. He is bearish, high growth technology, and bullish value. Difference between now and 2000 is the passive investing bubble that inflated steadily over the last decade. All theaters are overcrowded, and the only way anyone can get out is by trampling each other. And still, the door is only so big. Clearly extremely bearish on this market. This morning, there were still 218 primary stock listings in the United States with a market cap over $1 billion and EBITDA less than negative 100 million. Pretty much saying they're overvalued. You can't have a company worth over $1 billion with negative cash flow in the hundreds of millions. 29 of them had market caps over 10 billion, totaling 655 billion. Saying it again, all the silliness must go. We know he pretty much just liquidated his entire US stock portfolio. So just another bear. The Fed is so afraid of being the Fed of the 1970s that they're becoming the Fed of the 1930s. So he is saying that the Federal Reserve doesn't want to lose to inflation. So they're really trying to tighten down and crash the economy, which we've covered in other videos on this channel. And he's saying that because they're taking such a strong hand, they're about to become the Federal Reserve of the Great Depression. Go look at pictures from the Great Depression in the 1930s. Not pretty. And so he realizes very well what the impact of the Federal Reserve's massive rate hike program is going to have on the economy. One last legendary investor who's right more often than he's wrong. Billionaire investor Ray Dalio warned stocks could drop another 20% with further interest rate rises. So he agrees with Michael Burry. He agrees with Carl Icahn. Founder of one of the world's biggest hedge funds, Bridgewater Associates, Mr. Dalio, issued the warning recently in a social media post saying an interest rate rise from range 2 to 4.5% in the US will cause a 20% decline on equity prices. It looks like interest rates will have to rise a lot toward the higher end of 4.5 to 6% to fight inflation. Absolutely devastating. We are now seeing that happen. For example, while we are seeing a significant weakening of the interest rate in debt-dependent sectors like housing, we are still seeing relatively strong consumption, spending, and employment. My guesstimate is that a significant economic contraction will be required, but it will take a while to happen because cash levels and wealth levels are now relatively high. So they can be used to support spending until they are drawn down. So we are just heading towards a collapse, according to some of the most brilliant minds in the world. We talked about Charlie Munger. He's always long. He's always finding value. But I do know that Berkshire Hathaway is sitting on a lot of cash, just waiting for the right time to pick up a lot of these assets. We will stay on top of this market. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.